Well, good afternoon again. My name is Rob Churchman. I'm a partner in our audit and insurance practice in the government services group in our Richmond, Virginia office. And we're very excited to have you here today, welcoming you to our last session of the day. And we're going over our benchmarking survey. A few housekeeping items first, however. As you can see from the right-hand side of your screen, I have with me Lauren Strope, who is a director in our audit and insurance government services group, and also Brian Lithick, who is a senior manager in our government services group. They're going to be handling the bulk of the weight of the presentation today. And I'm going to serve as your moderator, and I'll be checking the chat room also if you have any questions that you would like us to address. If you had already been to earlier sessions today, welcome back. If you haven't been to any but this one, just going to go over, reiterate some housekeeping matters here. First, as I mentioned, the chat window is always open if you have a question on anything, either this seminar related. Just ask this question. We'll make sure we get back to you as quickly as humanly possible. For sake of having it be as smoothly as possible, please keep your microphone muted in order to reduce that background noise or reduce any kids in the background running. Or if we were at my house, my dog actually does hate the mailman and he goes ballistic every time a truck goes down the street. Important note here, to get CPA credit, you must join via the Zoom desktop app or the Zoom mobile app, not your normal web browser. If you're currently using the web browser, please download those apps by visiting zoom.us/download. Also important, if you are a CPA and you want to earn CPE, or if you just want to get a certificate to prove to your boss that you actually attended, certificates will be mailed to you within about 10 days afterwards. If for some reason you have not received it in 10 days, please keep a copy of the screen or text or email one of us on that you see on the screen now, and we'll make sure CBH Learning gets it to you. And then we will have a recording of this webinar available in about a week after we're done. And it'll be sent via email and posted to our website. With no further ado, welcome again to our 10th annual. It's hard to believe it's been a decade. It seems to have gone so fast. We do this survey because we want to help understand what's impacting the government sector, governmental entities and so forth. A wide range of issues. From over the 10 years, we've changed issues in and out. But we do have some where we've kept it pretty consistent throughout that time. And therefore, we'll have year-over-year trends. But we're looking at things like workforce benefits, use of technology. Obviously, we don't have 10 years. Thankfully, we don't have 10 years of COVID-19 data. Obviously, that's a recent pandemic that we wanted to get some just some knowledge on how it's impacting you and how it's affecting you in your business. These challenges, both fiscal and pressures that created the need for local governments to step up mitigation risk in workforce, cybersecurity, and other areas. So COVID impacted a lot of the areas we have had in these surveys over the years, and that's why we wanted to make sure we got data on that going forward. The areas we're going to cover: wide range, as I said, workforce benefits, use of technology, budget, COVID, financial reporting, risk assessment, and audit process, and also ending up with data and dollars. Some of our highlights from the survey: competitive salary identified as the most significant barrier to recruiting. Peers and organizations are also attempting to respond to this by having over 80% of the participants say the salaries will increase in the coming budget year. So great for all of you in that 80 percentile. Use of technology: 82% of respondents believe the increased technology will be needed to keep costs under control, while 51% still require some kind of paper. Sorry for the 51%. I'm sure you'd like to get at that higher and get up to more technology, not have paper pushing all around your desk and so forth. With regard to the budget, insufficient budget funding was identified as the main barrier to implementing new technology. And respondents are almost twice as concerned that they don't have enough funding budgeted for long-term replacement of aging infrastructure. With regards to COVID, peers of most organizations will continue to allow teleworking even after the pandemic is over. If you're not like JP Morgan or Citibank and so forth, going back in September, full force, looks like from our government sector and those who responded, that they are going to presume to keep doing some teleworking at some level of activity going forward. Financial reporting. We were lucky enough last year. One nice thing out of the pandemic is a pushback GASB statements, right? Well, we got 87 pushback. It would have been this year. We got it pushed back one more year. However, 74% say they haven't really looked at it or started beginning implementation. So that could be something that could really, sneak up and bite you. And we're going to talk about that in the financial reporting section. With regards to the overall assessment of risk at an entity, over the past 5 years, most fraudulent activities identified by the entity itself were done through the internal audit function, which was something we have not necessarily seen increasing that much over the years, but now these last 5 years, it has shown that they are catching it through the IA function. And then data and dollar. Very few entities are using cryptocurrencies. There's only a couple, one in Florida, one in Sacramento's looking at it and so forth. But they are, and only a few are considering utilization in the near future. We have to have learning objectives in order for the CPE to be certified as compliant. So our objectives: understand the current management trends of local governments, gain some insight into areas of concern shared by government finance professionals, assess the data for internal benchmarking and budgeting purposes, and also gain an understanding of what you all in your jobs believe the future holds for governmental financial management. And that brings us to our first polling question. We need to make sure we answer all these. Again, if you want to get CPE and you want to prove to your superiors, your boss, that you attended and get a certificate, we need to make sure we answer these all four. There'll be 4, so it's not too onerous. We're coming in. Looks like we got 81. A fair amount of us have responded. So we are coming in, and can we show the result? Right there. Yes, no, I promise to do so in the next year. Okay, appreciate that. And again, we do this even if you hadn't responded. So we're glad people that weren't able to respond were able to come to this seminar and find out the results. And we thank all of you, the 51 of you and the 24% who actually did respond to the actual survey. The more people we get, the better data we can provide to you, and therefore the better insight you can take away from the process. Participant data. Just to give you an idea of who all the 51 of you were who are on here that participated. And obviously not everybody who did the survey was able to attend today. Wide range, 44% cities, 33 counties, some schools, other authorities and commissions like EDAs and community development authorities and so forth. Pretty good range of people, types of people. We had directors of finances, so forth, CFOs, 31%, basically middle management, finance level, controller, finance managers and so forth, take up the majority of it, of 53. And then others, generally that could be budget professionals, procurement professionals. We have a wide range. Also could be city council members, board of supervisor members, and so forth. By number of employees, we had less than 500 was almost 50% at 46, and going all the way up to greater than 5,000 at 15%. So again, another good wide range. And as you know, the size of the entity can have a big variable on what kind of issues you're incurring and so forth. And then by revenue also, almost 30 type thing, with the majority of them being at the greater than $250 million level. Now moving on to Lauren's going to take over our first section on workforce benefits and the results we got from this year's survey. And you'll see in this one there's a fair number of year-to-year trends because we've been tracking this for multiple years now.
Thank you so much, Rob. Good afternoon, everyone. My name is Lauren Strope, and I am a director for Cherry Bekaert, a proud member of our governmental services group, and excited to be here with you today to kind of go over the results of the survey. So I'm not going to read to you exactly what percentages because I know you all can read. But for most folks, the staffing level for any financial and accounting positions has been about the same for the last several years. The thing that I notice about this slide is that we're seeing, and this is kind of hard to follow, but we're seeing an increase in the number of folks who have experienced a decrease in those positions in the last 4 years, ending with 2021, seeing 10% of us saw a decrease in the number of financial and accounting positions. Now, hopefully those positions are budgeted for and somebody will be filling that position very quickly is what we're hoping, because we know how much work you all already have. So let's hope that that trend doesn't continue. Most of the increases in salaries throughout entities seem to have occurred primarily in 2017 through 2019. And I think that a lot of that was still catching up from the Great Recession and still kind of giving those dollars back to you folks. But now, especially with COVID-19, it seems to have tapered off with only 55% of us seeing an increase in the last year. This is good news for 2022. It looks like 81% of us are expecting an increase in our salaries. I hope that that's beyond COLA for all of you. So as it relates to expected turnover in the last 3 years, in the next 3 years, not that much turnover is expected. I did want to mention that on the next couple of slides, we're going to see that retirements were up last year. So I'm wondering if that has a reason why we're not expecting that much turnover in the near future, just because folks will be moving into those roles and might be there for a little bit longer. So if we look here, you can see that there were a lot more retirements in 2021 than there were in 2022. And I think that really leads to the reduction that you have in the perceived ability to advance and the reduction in low morale, because generally it's those higher level employees that are taking advantage of that retirement. And once they retire, that leaves those positions open. So a lot of folks then are a little bit happier working there and have that ability to advance within the organization itself, which we'll see in a little bit also affects a couple other factors. So as it relates to the most significant barriers to recruiting and retaining talent, I don't think it's any surprise to anyone on this phone call that 84% of you responded that competitive salary is a big reason for that. I do find it very interesting in looking at this slide that the lack of work from home flexibility is still at 25%. And that was after a year of lockdowns and working from home, and it's still 25% of you see that as a barrier for recruitment. So that's just something to keep in mind, and maybe there's something that impacts budget for technology coming up that we'll talk about too. On this slide, I was really shocked that 33% of respondents have not implemented measures to reduce healthcare costs. So I thought that was quite interesting. For folks that have, with the wellness programs or incentives being at 63%, that did not surprise me at all. We do it with our firm. I know several of my clients have the wellness programs. I even had a client that had folks coming in to give the COVID-19 vaccinations not that long ago. So I think that is probably the most popular of all the cost reduction strategies. How you folks are getting your CPE, I think it's great that you're looking at those national and state societies and going to external webinars like this one. Just for a quick plug for Cherry Bekaert, please continue to monitor our website, our email blasts, and just talk to your CB professionals regarding upcoming CP events that are hosted by us for you. And that brings us to our second polling question. Really tough stuff today. Where are you attending this conference from? Give some more time for some folks to respond. Make sure we get that CPE. All right. So it looks like the vast majority of us are still working at home, which does not surprise me whatsoever.
I'm Brian Liffick in the Orlando office. I'm a senior manager, part of the government services group as well. Most of you were able to attend the IT hot topics. So some of these will kind of piggyback off of that, and you'll see some similarities there. One thing I did want to point out is as Rob had mentioned, about 84% of the respondents were either CFO or controller level positions. Thus, some of their answers were unable to, or I do not know. So we'll take that with a grain of salt for some of these more specific IT related questions. So here we have just the number of employees that are IT related within your entity. Obviously, kind of a different bucket for the different size of entity. So nothing too surprising here, and kind of sticking with the normal trends we see. I will say that we do have some that are outsourcing completely there at the bottom there. 8% of people have 0 employees in the IT department. Piggybacking off of that on the next slide, Rob, the percentage of IT There we go. The percentage of IT staff that is outsourced, over 53% of you are not outsourcing at all. But then we also have some kind of digression there as we move to more outsourcing. So kind of in line with the staffing trends that we saw on the previous slide. Really moving into what barriers are there from implementing the new technologies. The same two that are leading the charge year after year, competing priorities and insufficient budget, kind of go hand in hand there. If we have competing priorities, maybe there's not enough funding in the budget to focus in on new technology. The one area that I did find interesting was the lack of organizational agility is now at 18%. That's continued to trend down over the past 3 years. So that's a good sign that things are becoming more agile. Organizations are becoming more agile to change in this new technology, because that's something that's on the forefront of everything. Moving on to the next slide is concerning IT certifications. So here's one of those that over 80% of folks didn't know potentially, but the leading two there are PCI and HIPAA, which is your payment card industry, and as well as Health Information Privacy Act information. So those were the front runners, and if we kind of carve out the 20% that were able to respond on this question, that means that 14% of those were able to have that PCI. So good information there. Cyber liability insurance. I will say last year that no answer was at 23%. So really trending in a positive manner there, that we're down to about 3% of folks don't have the liability insurance, because that is an area that it really needs to be focused in on, and having that insurance out there, since these attacks are not few and far between anymore, and they're right around the corner for most of us. How would you rate your organization's preparedness for a cybersecurity attack? You'll see as we kind of trend across from 2018 through 2021, we had a lot more orange over in 2018 and 2019, and then we're continuing to see more greens, which is at least somewhat prepared as we move to the right. So everybody was almost at around that 90% range. Moving on to the next slide. Are your employees trained on the importance of cybersecurity? And I mean, wish I could draw the swing up on that very, very well one. Everything's been just trending up very well. So kudos to those that are in that 57% that think their employees have been trained very well on the importance of cybersecurity, because it is a very important area. Obviously, the 7% that are down with not formal training, maybe something to consider as we move forward. Training those employees on cybersecurity, whether it be just phishing emails or anything like that, it's just something to consider. Here we have 3 separate questions, just more informational. Over 54% of people have a chief data officer. Then the one that Rob was able to highlight in the preview of things is the use of technology in order to keep costs under control in the future. We're sitting at about 82% of folks are thinking that's going to be key, and I tend to agree with that technology is a front runner in keeping those costs down. And then finally, maybe another area for improvement around IT is the government risk and compliance application. Only 12% of respondents were able to have that implemented. So just an area of potential consideration as you move forward. How often does your organization conduct those phishing exercises? Here we have 33% of us are not having any sort of phishing exercises, and I know that there's plenty of those phishing attacks out there. So I know our firm has those, and some people get kicked with them pretty often. So it's they can be foolish in those phishing exercises. So it would be helpful to have those. But I will say that it is trending more positive than our prior year questions. I think last year it was at 35% had no phishing exercises completed. And then the last two on this slide are also more informational as far as the formal data strategy and then formal data management program. Sitting at about 50% have implemented the data strategy, and then as far as the data management program, around 40% have that implemented. So I know during the IT Hot Topics, they asked who had a data breach. This one's actually a little bit different because I think that was at 33% of people said they had a data breach. This one's actual or attempted data breach. So you'll see that we're sitting at about 68% of folks did have some sort of attack that was actual or attempted. The main one of those being that phishing. So 56% of folks had a phishing attack, and once again, kind of piggybacking off that last slide, that only 33% of folks, or 33% of folks, are not having any sort of phishing training or exercises. So something to concern there. And then concerning data breaches, who's actually attempting those or perpetrating those? Kind of as expected, 71% are from that deliberately perpetrated by an external party, and then 25% make up the unintentional information release. How confident are you in responding to a data breach? I know the Bryce had mentioned earlier today that if you do experience a data breach, you could be down for an average of 21 days, which is quite a long time, 3 weeks there that you'd be. So it is good to see that at least 92% of our respondents were felt at least reasonably confident that they would be able to respond and recover to a data breach. So 8% still have a little bit of work there to do. And then concerning attack and penetration studies, another area where you can kind of be proactive in finding your weaknesses or potential holes in your data security systems. 45% of folks were performing this, so that was a very good control to have in place to avoid any data breaches or breaks. Kind of switching gears here, taking a look at these systems. 37% of respondents are considering looking at replacing their enterprise business systems. Of those, the majority of those are heading towards the cloud, or at least considering heading towards the cloud. I'll kind of piggyback off of what Bryce had mentioned. When you're considering implementing new programs or software, you really need to consider the implications of that, where your potential weaknesses or breaks could be. So we definitely recommend doing some sort of pre and post implementation reviews related to those to make sure that when you're considering these new systems, they're going to kind of transition flawlessly. And then finally, the item that Rob had mentioned earlier as well, as far as the paper pushing, about 50-50 split there. We understand that a lot of this in the government realm is kind of driven by your compliance requirements and other policy requirements that can't get away from there. So, but this has been kind of consistent with the percentages that we've seen in the past. And then to the right there, the risk exposure remains high, with only 1/3 of our respondents having a formal risk program. So one more area for potential opportunity of improvement.
All right, so now we're going to talk about everyone's favorite topic, the budget. All right, so what percentage of your entity's budget is spent on IT? And for the majority of us, it decreased from 2020. I'm thinking that has a lot to do with additional hardware and software that needed to be purchased as a result of COVID-19 and those lockdowns, and just all the folks working from home that weren't necessarily working from home before. So compared to last year, your budget for technology in the upcoming year for the majority of us, it's larger. So we might have spent a little less in 2021, but we're budgeted to spend a little bit more this upcoming year. I found this to be a very interesting slide, and we'll talk about this in the next couple of slides too, but infrastructure. It is such a hot topic in the world of government right now, so it really does not surprise me at all that 57% of you have some concerns regarding the replacement of aging infrastructure. It also doesn't surprise me that 37% of us have that same concern as it relates to technology, as Brian just went over and we just discussed. The need is ever present to reduce costs, and this is one of the big ways that you can go about doing that. So it doesn't surprise me that we're looking to find those budgeted dollars in order to make those purchases. I thought this slide would be a lot more impactful this year with the COVID-19 lockdowns, but I am so grateful that only 34% of our respondents saw a decrease in the sales tax collections. We actually had 34% that saw an increase and 32% that completely remained flat. So thank goodness it wasn't as bad as I thought it was going to be. Okay, so as far as infrastructure goes, this is the main reason why I think we have so many folks concerned about infrastructure. 62% of us have infrastructure that needs attention. Only 2% of us have infrastructure that is fit for the future. And this is so impactful, especially this week. I don't know if you guys have been monitoring the news, but there's a bridge that connects Memphis, Tennessee with Arkansas. And there is actually a 911 call that is coming from the Arkansas DOT to Nashville, telling them to shut down the bridge on their side, and just seeing how all of that plays. There's two jurisdictions there. They're shutting down Interstate I-40. It looks like it's going to be closed for 2 months as a result of this. There are also about 700 barges that move through that area under the bridge daily. And they can't even go under the bridge right now. So it's a complete nightmare. So I think more and more infrastructure is going to be something that when you come back and do the survey again, we're going to ask a lot more questions on it. And it'll be something that's going to be really impactful in the upcoming years.
All right, the whirlwinds of COVID. Obviously, this is our new normal that we're living in, is the COVID environment. We had those new fundings as well as working remotely that we've kind of talked about in previous sessions and in this one. So hopefully you were able to attend the COVID session. If not, we'll be making sure to get out those slides as far as the funding and so forth. But we see here on this slide, we continue to see a mixed approach of teleworking, and with 59% of folks actually working teleworking. This is primarily kind of going back to that paper pushing compliance requirements that may require us to be on site or in person for some of those manual controls, as well as any safety concerns around employees and their general well-being. The one thing you'll see is between the two graphs here, a 6% jump between the two. So 6% of folks probably think that over the next 12 years, we're actually going to be more on-site versus the 59% that are working teleworking currently. Here we have the more than likely to negatively impact your government, how those COVID impacts were going to impact us all. Concerning investment balances, obviously there's so much uncertainty and volatility in the market that's an area to be concerned with. I will say that the 13% that will not be affected, kudos to you. That's pretty awesome that there's going to be no impact, and that's great news that it won't complicate things on your end. And then as we kind of go down, we have a lot of typical business type activities that are driven by activity, people being out and about, charges for services, fines, fuel and gas prices. So we understand that those larger impact areas are there. And with the gas prices and so forth, unfortunately, I haven't seen any, or fortunately, I guess, in Orlando here, I haven't seen any impact on the gas. Nobody's rushing out to get it, but I hear the horror stories of everywhere else. So moving on to the next slide, most specifically focusing in on the coronavirus relief funds. have you received them based on the size of your entity and how many, or the type of your entity and how much you've been able to receive. As they mentioned in the COVID discussion earlier, for those of you that have received these or are to receive future amounts, we do have a strong team and plenty of resources. So feel free to reach out to us if there's any other further questions related to whether it be CRF, all the CARES Act funding, or the ARPA funding that's on the forefront. Happy to help out in determining those. What agencies have provided you with COVID-related funding? The front runner there, obviously, the Department of Treasury, and primarily 59% of folks have had that. And then FEMA, the two big players we tend to see in most of our larger entities. And then other granting agencies, depending on the focus of the services or programs or operations of the specific entity. What type of fundings did you receive? That front runner there is the Department of Treasury and all those CARES fundings for the coronavirus relief funds. And then we have the Department of Education with the Education Stabilization Funds. And then looking into the future, we have all of the ARPA funding that's going to be trickling into the respective entities. How have you used coronavirus relief funds? This one kind of all over a lot of different areas, but where we would expect it to be is the PP&E, the personal and protective equipment. Obviously, we all didn't have that on hand, so had to go out and purchase that and get that in supply for use amongst our agencies. And then the payroll costs related to your public safety and public health employees. And then finally, working remote, we had to make those transitions with the lockdowns and so forth. So 55% of those having the working from remotely, having the technology increases to facilitate that.
Thank you so much. Got to remember to take myself off mute. So we're going to talk about some financial reporting. The first question we asked you was where you were at in the implementation of GASB 87, which covers the leases. First off, congrats to the 5% of you that are completed. I don't know if you've actually gone through the process or you just didn't have any leases, so you're automatically completed, but either way, congrats. And let's just make sure that by the time we come back and do this again next year, that we can all answer that we are substantially completed with the implementation. That way we don't have any headaches when we actually go to do our reporting. So I did think it was interesting because on the last slide, 46% of us aren't that far along with implementation, but only 39% of us are unsure how it's going to affect those financial statements. So I really hope you 7% are right, even though I haven't really started yet with that. But that's kind of where we're all at with this is 23% of us think that it's going to significantly impact. 38% of us don't see much of an impact at all, and 39% of us just aren't sure yet. I was very interested to see the results of this particular question, see what you folks were doing as far as implementing 87. These are all great ideas. I highly suggest getting that data now. And making sure that you have it. It's that old saying, you don't know what you don't know. So until you really have that lease portfolio, you really don't know how the standard is going to impact you. Also, as far as in the process of or have already implemented new software to track the leases at 13%, I think that's great. I do highly suggest if you have more than 10 to 20 leases, consider looking into some sort of software. I don't work for the software company, but it's a pretty robust standard. And once you get past the 10, 20 leases mark, that's a huge Excel file to update each and every year. So consider it if you have a lot, they can be really helpful. We've seen some where it just makes all the entry for you behind the scenes. So each year you just upload your data and get your entry. So the most challenging part of implementing 87, I don't think it's any surprise to us what we're seeing on the screen in front of us. We all knew that this was going to be a big challenge. The big one to me is the identification of the leases. I think this is a situation that's kind of similar to cap assets for a lot of you folks, where if it was left up to finance, you would have already had all this information and it would have already been in a beautiful package for us. But that's not the case. We have a lot of people out there that we're waiting on to send you the data. And sometimes, as we've seen with those contracts that get completed in the year and they never tell you, sometimes that data doesn't get to finance. So I think that that's going to be a huge one, is just how are you maintaining this data on a go forward? How are different departments telling you, hey, we've signed this new lease after the standard is implemented? Rob and I were talking about this yesterday, and he was telling me it might be a little late, but this is a great opportunity for governments to bring on a couple summer interns and give those folks kind of an experience as to what it is to work in a government. And you know, it gets to where you don't have to review all the leases and pull out all of that data, and you can just review what they do. So that's something to consider as well. So again, this is how many folks either are planning to or have purchased software to manage leases. I know for some of my clients, they actually just implemented ERP systems that have this type of capability. So they're using that. So they're not purchasing software. They already kind of have it. For those of you who don't know, again, just kind of look at the leases that you have and think about every year, do I want to kind of go through this process and draft the entry on my own? If it's easy enough, if it's like 5 leases, maybe that's something you want to do. If not, consider it. I think that it's absolutely awesome that all of you seem to be going straight to the horse's mouth to get your information on how new standards are going to impact you, meaning you're going straight to the GASB website or straight to the GFOA. I also think it's awesome that you guys are communicating with your current auditor. Hopefully that's us, but if not, I'm glad you're communicating with your current auditor to determine the impact as well. And this takes us to our third polling question for CPE. So again, polling question for those of you who weren't paying attention before. Since the survey came out, have you advanced the steps taken in implementing 87? For those of you that say no, it's on a to-do list, I'm just hoping your to-do list doesn't look like mine. I don't think I ever really end the to-do list. I just keep adding to it.
Just a few more seconds as we have 20 people that haven't responded that they may still want to.
We got to get that CPE.
And we had a question earlier about a system issue with one individual, and they missed the first one. You just need to answer 3 of the 4 to get your certification.
This is the third polling question.
Right, there's one right at the end too. All right, we're closed. 13% significantly have advanced their steps. Excellent. Let's get that number up higher next year.
Moving on to risk assessment and the audit process. Really focusing on the fraudulent events that occurred over the last 5 years and how they were identified. And as Rob had mentioned in the preview, internal audit overtook tips and all the other ways of finding these fraudulent events this year. So kudos to all those internal auditors that may be on the call, or reach out to your internal auditors and tell them the news that they're leading the charge. So 31% of those, but then tips right behind them. So the fraud hotlines are obviously a very hot spot of being able to find these fraudulent events. And then your review controls. So the next slide, kind of piggybacking off of that as far as the fraud hotline and what characteristics. 47% of us still don't have a fraud hotline. That has decreased 5% from last year. So we're making progress in the right way. Last year is at 52%. So just a very good control out there to avoid those fraudulent events. And then some of the characteristics that those might have, you really want to make sure that your employees know where those are or how to access those. And we've done a better job. That increased 5% this year. And same with allow for anonymity. Sometimes it can be intimidating when you're reporting those things. So having that extra degree of anonymity is sometimes very helpful and suggested in those. And that increased again 6% from the prior year as well. And then some of the other factors that you may consider there, the other characteristics of the fraud hotline that folks have implemented.
All right, I'll wrap it up with our slides on data and dollars. So the first one, the first question that we had covered the Freedom of Information Act and those requests, and it seems like they're really only going up. So keep that in mind as it relates to record retention and the types of communications that you have, because we're seeing those requests go up. So trying to keep very current with the times, do you transact in cryptocurrency? The vast majority of you do not and do not currently plan to. But I just saw in the news that Tesla was saying that they're not actually going to accept payment for your new car in Bitcoin. So maybe the 94% of you have something going, because that was the first big retailer that said that they were going to accept payment. Now they're saying they're not going to accept payment in a certain type of cryptocurrency. And that takes us to our very last polling question of the day, and kind of a plug for our 11th annual survey. So will you respond to the survey? And of course, we didn't allow for you to say no to us.
We'll leave this open just a little bit, because in case, like the one individual who missed one question, we want to make sure everybody who wants their certificate. Yep. And when we have 240 people on the line and 222 have voted in. $223, just have about 10 more seconds. All right, I'm going to end the polling. Share results.
Well, you've all committed, so we fully expect that you will be getting our link. For those of you that didn't get it last time, we'll make sure you get it next time. And thank you so much for filling out our survey for us.
Especially those who think it's silly that we even have to ask. They must be the people that do it every year for us, and we do appreciate that loyalty and the data that we're getting from you all. That concludes our survey, benchmarking survey discussion. Let me close the box. Thank you so much for being with us today. If you have any additional questions, didn't see too many that came up that were substantive in nature, usually a technology question or something. But if you ever have any question on anything, whether it be on this survey here or any other topic we've covered today, or any other topic you have a question about, please don't hesitate to reach out to any of the presenters you've seen today. Obviously, you have our information there. I'm simply rchurchman at cherrybekert.cbh.com. We'd be happy to get back to you with any information we can to help you out. As we value the public sector, we feel that we are basically, we all sink or swim together. And that's why we have these, that's why they have these seminars. The smarter, the more information that can get out into the public sector arena, that's just better for everybody concerned. So we do value your feedback, and there'll be a short survey that will come up here at the end that is helpful for us. And we like constructive criticism. So please, if there's something that you want to tell us, or we've had people in the past suggest questions for the next year's benchmarking survey, which is awesome, because again, we do this to help benefit you. And if we're not asking the questions and not gathering the data that's useful for you, then it's not helpful for either side of us. We do thank you again for Brian and Lauren and myself. We hope that you have enjoyed this. We hope that you will have a safe Friday and a wonderful weekend. And please take care. Be safe out there.